Hi all, welcome to my channel Satish Vlogs. In this video, I would be explaining the concept of a bills receivable. What is this bills receivable all about? What are the journal entries when the bills receivable has been accepted? How these bills receivable should get reflected or reported in the financial statements? All these details I would be providing in this video. With this introduction, let's move to the next slide of my PPT. In this slide, there is a diagram which depicts like a cycle. This is nothing but an accounting cycle. What is an accounting cycle? What are the various phases of an accounting cycle? All those details I had already provided in my previous video on accounting cycle. And the concept of bills receivable primarily arises when the business entity sells the goods or services on credit basis. What is this concept all about, and the details related to this concept I had already shared in my previous video on sale of goods or services on credit basis, and the links for these two videos I would be providing in the below box. Request the viewers to go through those two videos before getting into the details of the current video in order to gain a better understanding of the current concept on bills receivable. As mentioned previously, I would be considering the phases of an accounting cycle to explain my concepts. Okay, so as part of the first phase, which is a business transaction, accepting bills receivable is my business transaction. Basically, bills receivable is a negotiable instrument. There are two parties to this negotiable instrument or bills receivable. One is the drawer and the other one is the drawee. Drawer normally is a seller who is the person who draws the instrument on the drawee. Drawee is nothing but the buyer, and drawee accepts that bills receivable and return backs the same to the seller. And there will be a due date which has been mentioned on the face of the bills receivable. On the due date, the drawee pays the amount to the seller or drawer. That there is no need to involve intermediaries like financial institutions in order to manage this bills receivable. Okay, bills receivable can be discounted by the drawer. Bills receivable can be endorsed, which means it can be transferred to the third party, and the third party would be called as a bearer of the instrument. On the due date, the amount would be directly paid by the drawee to the bearer of the instrument. Because of these prominent features, this bills receivable has been widely accepted during the process of the business transactions. Okay, so now with this, let's move to the next phase of an accounting cycle, which is a generalizing phase. This bills receivable would be primarily arised because of the credit sale of the goods or services. So the amount has already been parked against sundry debtors. Now the amount needs to be reclassed from the sundry debtors to bills receivable account. So the bills receivable is supposed to be debited and the credit needs to be given to the sundry debtors account. Okay, so hope this is clear. Now let's move to the third phase of an accounting cycle, which is a ledger posting or creation phase. What is this phase all about? For whatever the journal entries which were made as part of the generalizing phase, for those the ledger accounts are supposed to be created and the entries are supposed to be posted accordingly. So the entries are required to be posted against bills receivable account, and the sundry debtors needs to be reduced to that extent as that account might have already been opened in the might have already been created in our accounting books. Okay, now let's move to the fourth phase of an accounting cycle, which is a trial balance phase. Trial balance is nothing but the summary of the balances of the ledger accounts. So the balances for the bills receivable and the sundry debtors are required to be updated in the trial balance, and the balances under the debit side of the trial balance should matches up with the balances under the credit side of the trial balance. There shouldn't be any discrepancy between debits and credits, because as we have been following double entry system of bookkeeping, ideally there shouldn't be any differences between debits and credits. Now let's move to the last phase of an accounting cycle, which is a financial statements phase. What are the critical financial statements? What are the critical statements forming part of the financial statement? One is the income statement and the other one is the balance sheet. There will not be any entry in the income statement because it doesn't impact my income statement. So the balances against the bills receivable is supposed to get updated under current assets in the asset side of the balance sheet, and the balance against the sundry debtors needs to be updated or reduced to that extent from the existing sundry debtors. Okay, this is how it is supposed to be shown or reported in financial statements. With this, I hope the viewers are able to understand what is this bills receivable all about, what are the general entries when the bills receivable are being accepted, how this bills receivable should get reflected or reported in financial statements, all these details. If the viewers like this video, request you to like it, share it to your friends and subscribe my channel for more videos. Thanks for watching. Catch you in the next video.